What's going on, guys? Welcome back to the channel. In today's video, I'm going to be going over the game plan for tomorrow, and I'm going to recap the trade we took on Friday. I went over in the last video, but for new people, I'll go over it. So if we look here on Friday, this is what the 30-minute chart looked like. So if we go to the 30-minute chart on the calls, obviously there's nothing here that's going to give us anything. These contracts were pretty much at zero. But alpha open, I guess you could say, we rejected that 30-minute 50. You can see it's a major pivot point there, and we couldn't cross on the 30-minute on the call side, so that ended up rejecting really hard, and actually flipped us all the way bearish on Friday. So when we look at these 30-minute charts, what does it tell you? It tells you the main trend in the market. So obviously we ended up coming down here on Thursday. We initially rejected this 50 right off the bat right here. That was actually a trade we took on Thursday, and we got a nice long out of it. But then on Friday, we rejected this at 10:30, and we came back and then just crossed right here on the 30-minute with the 50 curling up. So at that point, once we cross on the 30-minute on these 605 puts, that means the market's bearish. So what we do in that case is focus on the short side. There's no reason to be tossing longs on the table because we know the bears have the trend, and we just look for short entries. So we get the entries off the 0-day chart. We go to the 0-day chart here, and this is what we looked like. So on the put side, 5-minute time frame, this is what we played. Obviously, 0DT cross is your most ideal trade in a trending market, in the direction of the trend. So since we're trading bearish, like the trades you want to look for are 0DT cross on puts and 50 dip on puts. But the thing is with this cross, we weren't flip bearish yet. Even we didn't flip bearish probably until somewhere up in this point, because the 50 SMA and the 30-minute has to be curled up or flat, and we were kind of like in between that point down in this area. So once that next 30-minute candle closed at 12:30, that's when the 50 curled up really hard, and that's when we were officially bearish. And then we just saw this 10 SMA hold pretty much the whole day. But I ended up taking the 0-day cross right here. Really good trade. I went over it yesterday, but this is just textbook trade. We broke above this 50 right here. The 10 was catching up, got the entry on this 10-15 candle, and this was such a good looking setup, and obviously it paid big time right there. Got a massive move down. This cross gave over 100 points, and then at the time, I guess you could say we were technically still neutral, because that 30-minute chart was still in between curling up and being flat. So it was too early to tell what was going to happen. And then once we got back up with the 10 SMA right here, 11:45, you could have shorted again, and then we just held this 10 SMA. It pulled back a little bit here to the 10, held it the whole way, and then we got this massive move. So when we're in a trending market, that's when you're able to hold for longer. Neutral market is when we're more likely to chop and not have the best action. There could still be good moves, but neutral market is usually when we do get that choppy action, and we had really bad action the last couple of weeks, and we were mainly neutral. So when we're trending, you could hold for a lot longer. Use the 10 SMA as your trailing stop. A lot of the times when we're in a trend, this 10 SMA does hold, and that's exactly what happened right here. Every pullback, pretty much this 10 SMA got eaten up. As you can see, like the only pullback right there, pullback right there, pullback right there. Obviously, I wouldn't buy these pullbacks all the way up here, but that first pullback to the 10, if you want to add your winners, the 10 SMA is a good spot to do so. So if we're in a bullish market or bearish market, it doesn't really matter since we're trending. But you could buy these pullbacks to the 10. Like if this candle right here at 12:25 pulled back to the 10 a little bit, you could have added right there, trailing stop below the 10. It's a very light risk on the table if you did that, but 10 SMA is the spot you could do that. We never really got, we just never got a 50 dip after the fact, after we flipped bearish. So there was no other trade to take besides the cross right here, reclaim right there. These 10 dips up here, price was getting a little extended, so I probably wouldn't take those all the way up here. If it happened more so in this area, I would, but all the way up here, at that point the move has already happened, and it's just better to pack it up for the day, take the massive win, and move on to the next. So that's what we did on Friday. Going into tomorrow, it's very simple. So market's bearish, focuses on the short. There is a chance we do bounce though, because if we look, we're not going to have the 605s anymore. I think we might have the 595s, if I remember correctly. 595s maybe. And if we look here, 4-hour time frame, we're coming into a massive resistance point here on the put side. So we have this 4-hour 50 right up in here. So if we do gap down a little bit, wouldn't be surprised if we did end up bouncing after the fact, just because we have like I said, massive resistance up here, and also I'm not sure what the contracts for like Monday look like for like the 0 days, but it's possible they get overbought. If they're not overbought, then I'm gonna looking for a 50 dip. I'd probably be looking for a 50 dip either way. If we don't gap down tomorrow, I will try a 50 dip since we are trending, but I pretty much will take a cross on either side of the premium tomorrow, I believe, just because if we look on the 30-minute here, there's decent room from where price is and where the 50 is, so plenty of room to run depending on where that actual like cross happens on the 0-day chart. But again, ideal trade tomorrow, 50 dip on puts will be probably the best case scenario. If somehow calls did end up getting across tomorrow and we're not near this 50, I'll take it. Maybe lighter size, just depends. It really depends on how we open tomorrow, because I want to see if we reach that 4-hour 50. If not, we'll just have to see how it plays out. But plan tomorrow, like I said, 50 dip, put cross. Puts will definitely already be crossed just because of the recent move we had. So most likely 50 dip is going to be the trade take, and I'm just going to be looking for that. So yeah, if you guys enjoyed, drop a sub. Join the court if you want to learn. I'm out. Peace.